Hello and good evening once again. It's Levi Thunderstorm, the Alpha Thunder Trader, and I'm here to make this whole thing easy for you. Okay, now this date is October 6th of October 2024. Yeah, this is October 24, and the market is going to open. This is Sunday. All right, the market is going to open by 9 o'clock, 10 o'clock. This is Nigerian time, and I want to analyze for this week, this new week of October, and this video is to show you how I take my analysis. Yeah, and I'm very flexible with my analysis. Okay. Now, when it comes to analyzing for the new week, all right, I want to understand that when it comes to analyzing for the new week, the first thing you should always watch out for is the dollar index. And that's because when you know what the dollar will do, you will know how every other currency pair or financial asset that is connected to the dollar would behave. I trade gold, I trade USD, I trade USD DXY. I don't trade US Naira, I just have it there for, for fun. BTC USDT, I trade once in a while. Then for the US30 and D30, I just developed interest in these two lovely guys, and I'm going to trade them this week. Okay, now I use the line charts most of the time. You can see I have a sell limit place already. Sorry, a buy limit place already. I'm targeting a trade of 1,119, 1,119.50 USD dollars. Okay, I'm anticipating it to go to that level to give me that profit. But in summary, I'm anticipating a buy. Alright. Now, I use the line charts for my trade analysis. Let me use a different chart where I can have Okay, let me use this. Alright, so I make use of the line charts a lot of time because I make use of the line charts to make trading easy for me and to make it easier for someone to comprehend, to make it easier for a person to assimilate if I was teaching personally. And when you want to start out your trading, you mostly want to come from a monthly time frame. The monthly time frame will let you know what is happening on the big picture, and that's because the financial institutions like the banks and the big players, they make use of the bigger time frame to do things in the market space, and the first thing I would do is that I would always check out for. Okay, let me just go straight. This is an analysis. It's not like I want to teach you per se. I want to analyze the market, but you are looking at it from my shoulder to see what I do, how I take my trades. Okay, now I'm looking at the market right now, and this is the picture. For what I'm seeing using my line charts, I can see that this is a break of structure to the upside. Alright, and this tells me that the market price is bullish right now at this point in time. Okay, I'm just putting my own focus. Everything after this red line is none of my concern. Right now, everything after the red line is my focus. Alright, so I'm deleting that line. I don't draw things. I don't put too much diagrams on my charts. Right. Now, I want to do the next thing whereby I want to check for the price range. I want to know if the price is at discount or equilibrium or in premium. At discount, I know the price will be cheap for a buy, and at premium, I know the price will be very expensive for a sell. Do you understand? Right now, the price is at equilibrium. If I want to buy, I would want that the price comes down a bit into discount so I can buy at the discounted price. And if I want to sell, I will wait for the price to go upwards into a premium region, so I can sell at a very high price. Do you understand what I'm saying? This is the green. The green is my premium. The red is my discount. Okay. Now, yeah, below the 50, below this middle level is my discount. Above the middle level is my premium. Now is that I want to now, because I'm not working with I'm not trading on the monthly time frame. I'm not using the monthly time frame to trade. If I was going to use monthly time frame to trade, I would not have to go too far. I would just use the monthly time frame, weekly time frame, and daily time frame for my analysis and entry. Do you understand? But I want to trade. I'm a day trader, and sometimes as well I hold trade for days. You get, so it depends on the flow of the market. I go with the flow. I can scalp, I can do swing trading, I can do whatever. As long as I see my setup, I pick it. Yep. Yeah, that's how it works for me. Now, right now, I can see that price right now is in right now is in equilibrium. If I go down to my weekly time frame, I can see that on equilibrium right now, there's a breakout here. Right, I can see that the breakout. And moreover, I'm quite interested in why. Now, I want to know if this breakout will warrant a buy trade to the upside. In order to find out, I will use my horizontal to check for. I want to go back in time past now to get to see if there's a key level. I can see that this level that came back in time past, so this is a support level. It's most likely going to go upwards. I can put my box there. All right, let me delete this. Okay. All right, now I'm going down to my daytime frame. I want to look for a break of structure to the upside. And I can see that this level right now has been broken. All right, to the upside. My 4-hour time frame, I can see that these levels have been broken. By this, I can tell that this price now is bullish right now. Right now, I'm not talking about the entire trend right now. I'm talking about right now. Right now. What we just need to know right now is that this market price is bullish. It's bullish. However, we know that price now, if it's bullish, so the question is, where would price go to? Look at these smooth levels. You can see how smooth they are. You can put your line there. Price will come for these areas. Price likes to go for smooth levels. Alright, this level as well. You can see this high over here. Price will most likely go for that level as well. But however, we know that price doesn't just run up to these levels. Before going up to these levels, it needs to go down at least to get some energy. So it will come down a bit to this place, somewhere around here, down here. All right, then move upwards this way to this level, and over to this one as well. But however, price could do this. Price could do this. Price could just go straight to this guy from here. Go straight here. Oh, my mouse. I'm having issues with my mouse. Oh no. Let me use my trackpad. Alright, so price could go from here to this place and down here. Do you understand? Then finally go up here, and from there we can tell if we to go here or here. But right now over here, this place where I'm pointing to right now is my area of interest. This area is my area of interest. This area here is my point of interest. This is my area of interest. I'm expecting price to come down to this region before going to this place up. Alright, but if it goes up here first, I still know it is going to come down here. Alright, Where's my now? So this is how I use my line chart to do my analysis. Now, to get my precise entry, I will then move back to my candlestick. In my candlestick, what I'm expecting right now is that let me delete this box. All right. So now I know that the trade right now is bullish, and I know it is going to come down. Now I would first of all use my Fibonacci to know the current price range. I'll start from this low here, this low. I could take, okay, delete this guy first. Now, this is why I use my line charts. Observe something. On my line charts, this is the lowest guy here, right? I could use this guy as my low. On the candlestick, you can see there are different lows here. This guy that is lower than this one, I would not get myself distracted. I would prefer using this guy here. Okay, so I could just draw my fib like this. Lowest guy here. So this guy. Do you understand? So I can go back to my candlestick. So I'm not really distracted by this guy here. I can bring him here as well. It's not a bad idea, but I'm flexible with these things. Just understand what is happening. Right now, I'm expecting price to come down to this level. Okay. Now, the reason why I cannot buy here right now, even though I know that price is going to buy upwards, dollar is going to buy upwards. The reason why I cannot enter a buy now is that inside this range, you can see that. Let me delete this. You can see that this middle line and above is premium. This middle line and below is discount. If I know that price is going to buy upwards, right, I need to wait for price to come down into a discount. So I can buy at a very cheap price, then go upwards. Do you understand? That's how it is. Because if I decide to buy from these points right now inside this red region, price will come down, and that will not be nice. All right, that could lead to a huge loss. You don't want that. You're not patient. Knowing that price is going to come down into this green region, knowing that price will come down beneath this middle line into this discount region, the question is, what do I want to find? The question is, where will I know? Where will I be expecting price to reverse from? Okay, I know that price is going to do this, right? Come down somewhere here and jump up, right? The question is, where am I expecting price to react from? Now you have to pay attention to what you see to your left. Now, where is it? If you observe here, you can see that. Now, use a line chart. All right, use a line chart. This is a level. I'm combining Malaysian SNR straight up with ICT. I merge them together. All right. So that's a level. These two levels are my area of interest. You understand? Then if I go back to my candlestick charts, so I would expect that price will come. When price comes down to this level where my mouse is pointed to, I'll look for a market structure shift to this level. Then I'll take it to the upside. If it doesn't give me market structure shift, it could still come down here, and I'll take the buy signal from this level. However, I'm not seeing a lot of details. But if I was to use my ICT method, if you observe, this is another block. I could draw. Sorry about the noise. I could draw this here. I could draw this here, another block. All right. But if I don't use my ICT, I want to use my Malaysian SNR. I could just put my line here. On the line chart, you can see how it perfectly snaps with this. Now is that I could now go down to my lower time frame, such as the 15 minutes time frame. And let's see what we have. I want to refine my level. I want to get a very nice entry position. Now, I could do this. This red line is that resistance region. That's okay. The support region we found from the higher time frame. I'm taking it out. Now, I would want price to come down to this level. Do you know why? Is that I can see these guys. This 1, 2, 3. Do you see this nice guys? This is like liquidity. For you guys who use ICT and SMC, that we call liquidity. And I will expect that price will come down to lick up this liquidity, tap into this level, and bounce upwards. Do you understand? Okay. Now yes, that's the level I would most likely want to take, right? Now, but before I would yes, okay. I know you want to ask me now, how would I tell that price is now going downwards to this level? Is that when I go back to my 4-hour time frame, I want to pay attention to this. If once price comes down to break this, you can see my line chart, you can see this low here. So if price should come down to break this guy, okay, delete that. If price should come down this way, okay, that's what price will do. Then to go back up a bit, then go downwards. Do you get? That's what I would expect price to do. Go downwards to where? To this, this level here. Either this one. But the one I would know, the one I know, or how, okay, the one that would be good for a trade would be where you find a market structure shift. So if price gives a market structure shift here, a reversal pattern, then we can take a buy from here upwards. Else, if it goes down to the next level and gives a market structure shift, we can take it upwards. If we go downwards to give a market structure shift, we can then take it upwards. End of the 3 levels. However, I love to be precise. I love to have something very, very clear. I don't want too much POIs. So what I will do is this. I will go down to my 15-minute time frame to refine my entry, to find a setup that I'll be much comfortable with. Now, can you see that this V you are seeing here, this crest, has not touched this level? It just went up, it didn't touch it. This level has not been used up. This level is still fresh, all right? It has not been mitigated. Now mitigated, you can see that also the pin has not touched it. So I expect price to come to touch this level. Yeah. Now how about these ones? These ones too as well. This one too as well has pins above it. You can call this liquidity as well. These 2 guys above the line. But you see, if you should look downwards, there's still also these ones here. Imagine if these 2 lines if this pin had touched this line over here, I would not probably be expecting price to come down to this level here, because I can see that this line has not been tapped. Even though I can see that this line is still fresh, I would expect that price will tap it, bounce up, tap this one, bounce up, then tap this one finally, then go up. This is how I take my trades. If I miss the trade, I miss it. But I do well to ensure that I take the best trades to avoid unnecessary losses. Do you understand? I think this video right now is too long and you might probably have lost what I was trying to explain. I'll make more videos to make these whole things easier. Okay, now we know that. So what we're expecting now is that dollar is going to break downwards. break downwards. So once dollar break downwards this level, we will be expecting a sell for the next couple of days or maybe this week. Then once it taps this level, it can now start buying upwards. It can then start buying upwards. Now, why we're expecting dollar to go downwards, it means that on gold, on GBP/USD, we're expecting dollar to go upwards. If dollar is going downwards on DXY, we're expecting that on gold and GBP/USD, these two assets we are seeing, they will both go upwards because dollar will be going downwards. And when dollar would resume the upward movement, I will expect these two guys to go downwards. So it's the reverse. Do you understand? But for USD JPY, when dollar is going downwards, I will expect USD JPY to also go downwards. And when dollar is going upwards, I will expect USD JPY to go upwards. Listen to this video, you understand the difference. Okay, so the one that has dollar on the right side, like this gold USD, GBP/USD, the one that has dollar on the right side, will always do the reverse of what you are seeing on DXY. But the one that has dollar on the left side would always do the exact same thing you are finding on DXY. So when DXY is going downwards like this, USD JPY will go downwards. Let's check for every other USD pair as well. USD, what do we have? When dollar is going downwards, I'm trying to load this. Okay. I believe you gain value. Please share this to your friends. Like the page, subscribe to the page. I guess I'm having network issues. Okay, it came up already. Dollar. Come on. USD. So every financial asset that has USD to the left, you can see USD CAD, USD C franc, USD CAD, USD JPY. All these ones will go downwards as dollar is going downwards. But anyone that has, let's say, USD to the right. Okay, let me show you. Like this one's now, you see AUZ. You can see USD to the left, to the right. They will do the opposite of what you find on DXY. So in a summary, is this: if you find a currency pair that has dollar to the left, it will do the exact same movement you find in DXY. But if you have a currency pair that has dollar to the right, it will do the opposite of what you find on DXY. So because I know that DXY is going to go downward for a while, I'm expecting gold and GBP/USD to go upward. Do you understand why USD JPY will go downwards? Now let me check gold. Okay, you can see I even have sell limits placed on gold. I'm expecting it to go to gold. Okay. Sometimes gold doesn't follow DXY. I want you to know that. So I'm expecting that gold will come down tomorrow morning to touch this level and buy upwards for me. Okay. Yeah. Yep. I'll end the video now. It's quite long. Let me check. Yeah, I want to show you why I placed a buy limit on dollar, and I want to show you why I did that. Now watch. If you observe closely down to the 15-minute time frame, you can see well that this is okay. Oh, I remember. Yes, on the 4-hour time frame, I had there's an other block on the 4-hour time frame. Where is it? Now on the 4-hour time frame, this is another block. If you're using ICT concepts, other block is this last black candle you are seeing. the last downward candle, that was the last downward candle before price started shooting upwards. So that's the order block. I'm expecting that price, but I like to also include this last set of candles. So these two last candles that went downwards before these red ones went upwards to break above this, that's the order block. I'm expecting that price will come down to that order block, then buy upwards. Now is that on my 15 minute, on my 1 hour time frame, I have, you can see it's still another block. It's also a level as well. If I use my line charts, you can see that that's a V you are seeing there. Sorry, an A you are seeing there, a peak. Going back to my candlestick, you can see that this line, this pin I'm pointing my finger to right now, this pin I'm pointing my finger to right now, it's actually a liquidity. Price will come to hunt it, then tap my buy limit, then sell, then buy upwards. Okay, I'm ending the video right now, and yep. Okay, so that's it here on the 15-minute time frame as well. Okay, I believe you gained value from this video. Yeah, I'm kind of exhausted. I guess you already hearing from my voice already. Yeah, share the video to your friends, your family, subscribe the video,